Good afternoon, traders. This is Matthew GS. We are 23rd of February 2025. It's currently 5:03 p.m. in the UK. This is episode 31 of the 51362 EMA Strategy. Welcome along. If you're brand new to the stream, please do subscribe, hit that notification bell so you are notified whenever we upload our videos. And it's great to have you here. Thank you for tuning in. In today's video, I'm going to give a complete breakdown of Euro USD for a few opportunities to short and to buy for this week. I'm also going to be looking at Bitcoin, US 30, and gold, and maybe GBPUSD, just to see if there was any opportunities this week to get in on the market. So without no further ado, let's dive straight into this. So we're currently looking at EU on the 4-hour time frame. There was straight off the bat a beautiful short opportunity, and we could have set a sell limit. If we look left, it's always good to look left, and because we're on the 4-hour time frame, there's less data compared to, say, looking at the 1-hour time frame and these kind of lower time frames down here. So when you're on the higher time frames, you can look left a lot easier. And there was this institutional candle here, so we did have this last up candle before this down move. So if we set, I don't know why that's actually, oh, that was red from, I was just doing a bit of testing. This should be green. So if we mark up this potential reversal zone, so this is institutional candle. We've had a massive sell-off. Can you see how this candle wicked up? It didn't actually quite get there, but anyways, it's dropped massively, and price has decided to come back into this area here, right? So this is why the market reversed. It doesn't randomly reverse. It has reversed because of this institutional candle here. I mean, it could have carried on going higher, but it's decided to reverse. If you didn't have a sell limit here, it doesn't really matter too much because we can catch the move on the way down. And what happened was we've seen that the market is starting to reverse, right? My first point of interest would be this institutional candle here. So there's a potential that the market could reverse from here, right? Or it could carry on going lower. But this is the target, right? If we got in on a sell limit up here, this would be the first take profit target, right? And if you set a buy limit here to go higher, you would have got stopped out, right? But then your second point of interest would be the 62 EMA, and there was also a institutional candle that lines up perfectly with the 62 EMA, and that institutional candle is this candle right here, right? Can you see how this candle is a different color to these candles? That really helps distinguish that this is a potential institutional candle, and it does actually make our life a lot easier. On C Trader, just to note, it's not always a different color. It can sometimes be all the same colors, and that can be a bit confusing. This is why it's a good thing to use TradingView and C Trader. But anyways, there was an opportunity to short because we did have the 5 and the 13 EMA crossover, so the alert would have gone off for Euro USD, right? 513 crossover. Then we had the 13 EMA alert go off because of this candle shooting up here, right? And then starting to reject. So we could have set a sell stop on the candle that has gone through the 13 EMA. And this is a sell stop. This is the entry. Stop loss, I mean, that's kind of a bit tight. Could have whipped up more, so maybe we could have it there. Take profit is the 62 EMA or the institutional candle. So that trade there is a 1-to-1, and it did go a bit lower. So it did actually start reversing there. So it could have been a 1-to-2 trade if you held it before it started to, reverse there, right? So that's a short that could have been caught. And then I actually placed a buy stop. So I never set a buy limit on this trade. I could have done that. That would have worked fine. But on this example, I just wanted to see, right, is it going to reverse from this institutional candle, or is it going to break the 62 EMA and carry on going lower, right? So then I set a buy stop on this candle here. This is the candle, the last candle that hit the 62 EMA and then started to go higher. So I've set a buy stop on this candle here on the opening, stop loss there, and then I set a take profit. I think it was breaking that high, but I was observing this trade. So this is nearly a 1-to-3 trade, and if you give us a second, so this is the trade that I took. If you can see, if I zoom right in, can you see how I had a buy stop on the opening of this candle here, and then so the market started to reject away from the 62 EMA. It has mitigated its position from this institutional candle here, so they broke even on their trade and they decided, right, okay, they've done what they've got to do, and now they're going to reverse the market. So this next candle here has gone like that. I'm in the trade now. Then the next candle was printed and it started to go higher, and then the next trade is gone higher like this. And then the aftermath of Euro USD is I got out around there, so I caught a 1-to-2 trade pretty much, and it was a very, very good trade to catch. So I was very, very happy with EU. So like I mentioned, there was opportunity to short EU once up here for the sell limit, twice here for the 513 EMA crossover, and I mean even there was another opportunity to short. See this wicked up here, so you could have had a sell stop on there and caught this very small price movement down here. But anyways, the main move was off the 62 EMA and the institutional candle here, which left a 1-to-2 trade. So very happy with EU. Moving now onto Bitcoin. Now with Bitcoin, there was opportunities to buy and also opportunities to sell. So going on Monday, we had the 5 and the 13 EMA crossover. We are below the 62 EMA, so really we should be looking for sells. And then we had this candle here wick up. Okay, this is wicked up. It's gone through the 13 EMA. It's kind of, I would say, gone into this area of this institutional candle here. It's wicked up to there. They've also mitigated this position from this last up candle before this down move, right? So they brought the market back up here, but then we got in on a sell stop on the candle that's gone through the 13 EMA, and we placed that on the open there. Stop loss just above the high of this candle here that's gone through the 13 EMA, and then TP would be to take out this low or this low, or there's a low here as well. And as you can see, price did actually sweep all of those lows, and it went as far as that, which is over a 1-to-2 trade, and that was a beautiful trade for the short opportunity on Bitcoin. Then there was an opportunity for the buy on Bitcoin. So we've had the 5 and the 13 EMA crossover here. One thing you can do on the indicator, if you go to the indicator, you go to here, and then you can go to visual order and you can bring the EMAs to the front of over the candles rather than behind. So if you go like that, the EMAs are actually behind the candles now. Can you see how the candles are over the EMAs? But sometimes it can be hard to see visually what is actually going on with the EMAs. So we can go to here and then we go to visual order, bring to front. Can you see now that the EMAs are over the candles, right? So we can see that the 5 and the 13 EMA has crossed over, right? I know we are below the 62 EMA, but again, we're buying low, we sell high. So we're looking to buy low here. And the 13 EMA has gone off because this candle has wicked down like this. So what we do is we set a buy stop on the open of this candle like this, and then stop loss is you can have it just below the low there or just a little bit more just for room to then get stopped out. And then TP, to have TP would be good to take out this high here, and that was a 1 to 3 trade right there. So that was a very, very good trade on Bitcoin. I did actually take this trade, so very, very pleased with the buy. And then after taking out this high, this is just completely reversed, right? Don't worry about trying to catch these moves here because we can get on the second phase of these moves, right? And as the market is closed with FP Markets, my broker, we can actually look at the live data now with Bitcoin, like we are Sunday, but obviously crypto is 24 hours a day, 24 hours, 7 days a week, so it's open over the weekend. I don't trade over the weekend. I like to recharge and do what I got to do. But there was an opportunity to short Bitcoin off the 62 EMA, right? So this is where price closed on Friday with my broker. Then we've had the pullback to the magic 61.8, the 62 EMA. We are looking for sells because we're now back below the 62 EMA. So then we can set a sell stop on the open of this candle right here. Stop loss just above the high of this candle like this. And currently, if you took that trade, we are heading for a 1 to 2. And that's currently where price is right now. So beautiful trades on Bitcoin for the sell, the buy, and now the sell again. So once again, Bitcoin has been great for this strategy. Moving now on to gold. With gold, I caught the beautiful long position, and on the Monday, so it's always good to look left, right? Always look left. We have had this institutional candle down here, right? It's this last down candle before this up move. This candle here has captured, not only has it captured liquidity, where is, oh, okay, yeah, this is going to be this one here. So it's captured liquidity here, right? This candle has swept all these lows here, but it's also mitigated its positions out of this institutional candle here. Can you see how this is easy to tell? This candle here is a different color to these candles, and this candle has not only swept these lows, it's wicked down and it's mitigated its position here, and then it started rejected. This just does not randomly just wick down for no reason. But yes, it has wicked down to take out these guys, but the main reason why it's done that as well is to mitigate its position from this candle here, which it has done. It's rejected. We've pushed away. Then we've slammed straight back down into this institutional candle here, this one here, right? So now they've broken even on their trades. we've started to then pull away. This is Monday. Nothing really happened on the Monday. The Tuesday, we've had the 5 and the 13 EMA crossover here, like this, bang, bang. And then I got in for a buy stop on this candle here. We didn't get a wick down to the 13 EMA, but the reason why I got in on this candle here, like this, and my TP was to take out this high here like this. This is pretty much a 1 to 3 trade, which I caught that 1 to 3 trade, right? The reason why I got in on that buy stop here is because I knew that the market, the gold, has mitigated its positions here, right? This is my confirmation. So I'm confident that we're gonna go higher, right? And I didn't want to, and I didn't have to wait for a 13 EMA crossover, candle that spikes back down to get in there, because I had confirmations beforehand that this is what happened. This is the phase that I'm in. We're in phase 2, right? We're waiting for phase 1 to happen, and then we're getting in on phase 2. So that's why I got in on this candle right here, and it was a beautiful trade because it was a 1 to 3 that was caught on gold, right? Very, very happy with gold. We also did have another opportunity to go in for another buy. We had this candle wick down to the 13 EMA. Then the second candle wicked down. So think of this, right? You're looking at this, and 2 candles have wicked down into the 13 EMA. Why get in on this entry here, stop loss below there, and at least take out that higher there? That's not even a 1 to 1. From there, yeah, it's very nearly a 1 to 1. But you get in on the second candle that has wicked into the 13 EMA. So you want to set a buy stop on this candle here, and then stop loss just below that low. This candle, it ended up reversing from there. It's very nearly a 1 to 2 trade. So we could have caught a small buy movement here for another buy opportunity on gold. So very happy with gold overall for this week. There were some good opportunities to get in. Moving now on to US 30. This is where I got stopped out. Not every trade's are going to win. We're not going to win every single trade. No trader ever wins every single trade. Like, you're going to have losses. And I was bullish on US 30 and I got it wrong. It is what it is. You've got to take the trades when the criteria is met. So going from Monday, right, I'll explain why I thought it was going to be bullish and how I got stopped out. So we had this institutional candle here, right? Can you see this last down candle? We've had a bullish move away. We've come in to the 62 EMA. We've rejected it and kind of very nearly mitigated, but it didn't. Then we started to pull away, and then I set a buy limit. I believe I set a buy limit. Yes, I believe I did, on this institutional candle here. And to be honest, it was a big stop loss, but I was fairly confident in a way that I thought that, all 5 EMAs have crossed over. We've had a bullish movement away. Price has come back down. We've rejected of the 62 EMA. We've come down. We've mitigated the position here. So I'm thinking this is going to go on a nice bullish move, heading for this institutional candle up here and potentially to go higher. And that was kind of my trade setup. And as you can see, price did start to pull away. I was in profit, some nice profit. Then price just slammed back down into my area. I've seen that many times where you see that it's going to go, then they take out loads more buyers, They're doing some more liquidity sweeps. They're taking buyers at the markets. They're doing what they've got to do. And loads of times they then carry on the market, right? So I was patient with all that happening. I was in drawdown. And then we did start to get a movement away. And I thought, yeah, here we go. And then, as you can see, the market just said, nope, you're not having it. And then it just completely reversed. And that's absolutely fine because I got taken out here. My stop loss was here, right? So I've got taken out there. If I didn't have a stop loss and I'm overly confident this is going to carry on going higher, then, you know, I could have lost a lot of money. And that's not how we trade. We need to have stop losses in place. That's where my stop loss was. I got taken out. I got it wrong. You know, it is what it is. Move on to the next one, and then this completely reverse. Could we have caught the sell on the other side? I mean, maybe. We've had all three EMAs now crossover, right? We didn't quite get the 13 EMA alert to go off, but if you was looking at the trades and looking at the news and see what's going on, so something happened in the news to cause US30 to do this. I don't know what it is, but something has caused that to happen, or it might not have happened. There could have been other factors in play, but there could have been a sell stop position on this candle here, and then stop loss there like that, and then catching this move down here, which would have been a crazy move to catch, but it didn't really hit my criteria. I do like to get in on those 13 EMA alerts and all the rest of the stuff that I've shown you, but it is what it is. I'm not too bothered. We move on to the next trade. And the thing is, I've caught some other good trades on the other markets, so I'm not too fussed. And then now just finishing up with GBPUSD. Was there any opportunities with GU? And with GU, Monday. So Monday, it's consolidated, but the point of interest is going to be this institutional candle here, right? It's so easy to see that this candle is different color to these candles. We've pulled away. We then have the 5 and the 13 EMA crossover like this. We could have set a buy limit on this institutional candle here, right? And then taking out that higher there is nearly a 1 to 3. Holding up to there is nearly going on to a 1 to 4 trade. So buy limit on the institutional candle would have worked out perfectly. Then the other way to get in is, okay, the market has had the 5 and 13 crossover. That's an alert, right? And then if you're seeing, if you want to play it safer and see if the market's definitely going to reverse or starting to reverse from this institutional candle, what you could do then is set a buy stop on the candle that has mitigated the position, which is this candle here, right? So then we set a buy stop on the opening of this candle like this, stop loss below the low like that. TP1 is taking out this higher there, and then if you hold to it, start reversing, that's nearly a 1 to 3 trade like this. So that was the move on GU. As always, week in, week out, these trades do happen. It's just a case of setting your alerts so you're not having to stare at the charts all day, looking to see if the criteria is met, setting your limit orders, right? Setting your risk in advance, and then letting the trade play out. That is it in a nutshell. As you can see visually that I've shown you today, it's happened multiple times. So I'm very happy with the trades overall and a very, very positive week. So finishing up now, I do appreciate everyone that has jumped on. Once again, if you're not subscribed to the channel, please do subscribe. Please do also get yourself in the free Trade Masters Telegram group. I post the trades that I've caught from time to time, updates and the latest postings for this strategy on a week by week basis. A new thing I'm going to be doing as well is posting the market outlay for the week. That's going to be posted on a Monday and Tuesday. It's just a breakdown of Monday, Tuesday, Wednesday, Thursday, Friday, what's going to be happening each day in the markets, what's going to be really moving the markets on a day-by-day basis. So that's going to be new in the chat. Our broker is FP Markets. We get to use any lot size in any market. And as you can see, this strategy works for any market. So pick a market and just go with it. And then with the TradingView, I am affiliated with TradingView. The basic package, we do get the 23 alerts. That is more than enough than you need to trade this strategy, and it is the best thing. Since I've used those alerts, I've had very, very good success with this strategy, and it is an affordable price. So if you feel like sign up my link, it will be in the description. Now, just finishing up on the economic calendar. For next week, we have on the Monday, we are only concentrating on red folder news. So there's Euro red folder news on Monday, and then Tuesday AUD. If you trade AUD, there's Euro there, there's Euro again, there's USD red folder, and then I know what's actually going to come up. So USD, red folder news, quite a lot actually on the Thursday. And then finishing up on the Friday, there's Euro news and a lot of Euro red folder news actually over in Germany. So something to be mindful of on the Friday. And then yeah, some more red folder news on the Friday for the US dollar. So once again, it's going to be busy week. I'm excited. I'm also working on this new project, and I'm not going to give away too much, but I looked back on my journey of everything that I've learned and how I've learned it, and I've noticed something that I struggled with when I first started to trade. So currently I'm putting something together. It's a new project I'm working on. It's going to take months to finish, unfortunately, but I want to get it spot on before I release it. But this is crucial, I would say, in your journey, and I'm excited to put it all together and release it. So keep your eyes out for that, posted on the Telegram chat when that is ready. And this is definitely going to help all traders on their journey, because it definitely helped me on mine. So yeah, exciting things to come. Pleasure having you on board, and appreciate your time. I will see you in the next one. Let's have a good week. Bye.